Hey traders, Jason Leavitt, Leavitt Brothers. Reminiscence of a Stock Operator. Ask any good trader for a list of his favorite trading books, and this book will be in the top 5. Okay, it was originally published in 1923, and just the fact that it stood the test of time for so long tells you it's a gold mine of information and tidbits. Concepts that are common knowledge today are in this book. Okay, Jesse Livermore coined them. He created them. He discovered them. Okay, he literally coined phrases 100 years ago that are still used today. And his education was in the arena. Unlike today where guys will read a lot of books and study a few charts and then in 3 months they consider themselves an expert. They didn't have computers back then. They didn't have books, they didn't have courses, they didn't have anything. He learned by being in the arena, playing the game, learning from his mistakes, being objective, studying his results, and just moving on. Okay, you've heard that the trend is your friend. He's the one who said it. You heard that you can't get rich taking a 4-point profit in a bull market. It's in here. Okay, you heard about the concept of selling down to the sleeping level. It's in here. He said that no stock is too high to buy or too low to sell. In here. Okay, he talked about continuing with trades that are working, but ending trades that are not working. Okay, it's in here. I mean, it's the same thing we say today, 100 years later, about stick with your winners, cut your losers. He talked about there's not a bull side or a bear side. There's just a right side to be on. He talked about not being curious about why stocks do certain things. He talks about how patterns repeat themselves. He said human beings haven't changed in 1,000 years and they're not going to change for another 1,000 years. So whatever patterns appeared yesterday are going to keep appearing going forward. Okay. He was a tape reader before there were tape readers. He would watch the tape. He'd watch trades come off on the tape. He'd watch them take place at higher and higher levels, and then they pull back, and he'd see the prices go up and up and up again, and they pull back. And he noticed that when they went through the highs, they would often take off. We do the exact same thing today with charts 100 years later. Okay, we watch charts go up, come back down, go up, solidify a resistance level, come back down, and when a chart will go through resistance, boom, oftentimes it takes off. Okay, we do today exactly what he discovered 100 years ago. Okay, and it's really interesting to hear it from him because, again, he learned by being in the arena. Computers didn't exist, books existed, but not about trading. He learned by being in the arena for decades, and he wrote about it essentially in this book. Okay, there's so much brilliance in this book that I've often thought that maybe it's fictional. I don't know. Could one person really experience that much stuff? Because there's so much good stuff in here. But I guess unlike today where we have so many obligations outside of trading, I guess if all he did was trade and think about trading, then maybe it is possible to experience everything that he experienced. Let me read you a couple passages from the book. Okay, here's page 22. He says, "The desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street, even among the professionals who feel they must take home money every day as though they were working regular jobs." It's the same thing we deal with today. How many traders do you know who overtrade, who think they have to do something every day, who can't sit on their hands? Okay, 100 years ago, he saw the same thing. Wall Street professionals who overtraded, who felt like they needed to do something every day. Here's another one, page 25. He says, "I never lose my temper over the stock market. I never argue with the tape. Getting sore at the market doesn't get you anywhere." Okay, we deal with the same stuff today, which tells me we as human beings haven't changed in 100 years. Of course we haven't. It's not a very long period of time as far as evolution goes. But the same stuff that he dealt with emotionally and psychologically are stuff that we have to deal with today, which is why the book is so relevant today. Another passage, page 59. He said, "When I couldn't play according to my system, which was based on study and experience, I went in and gambled. I hoped to win instead of knowing that I ought to win on form." Okay, so he talks about, I have a system, I have a process, I need to follow it. My system is based on rules and experience, and if I follow it, I'm fine, but if I deviate from my system, then I'm a gambler and I'm going to lose. Okay, sounds like something that could have been written today. Let's go to another one, page 92. He says, "Since the entire list," and in this case, list is referring to the stocks that he's looking at trading, moves in accordance with the main current being the overall market, there was not much need as I had imagined, to study individual plays or the behavior of this or that stock. So essentially what he's saying is that when the market moves in one direction, you don't really need to pay too much attention to the details of individual stocks, because most stocks will move with the overall market. He said if you get the overall market right, you don't have to worry about the individual stocks. Okay, it's the same thing that happens today. When the market moves up, most stocks are going to move up. Okay, when the market moves up, you could randomly buy 10 stocks and 7 out of 10 are going to go up. Okay, so the same stuff that he dealt with back then, we deal with today. Okay, one more page. Page 101. Okay, page 101, he talks about the underlying current of the market. Okay, he talks about there being like an underlying force that nobody really could explain, nobody really had control over, which is the same thing that happens today. The market sometimes has a one-track mind. Okay, it just maybe wants to move up, and it'll move up and it'll move up. And even if there's bad news, it'll take a little bit of a hit, then move up. If bad earnings come out, it'll take a little bit of a hit and move up. If the foreign markets are down a little bit, the market will take a little bit of a hit and then move back up. He talks about this underlying force that seemed to be in place, and that was back when there were only a couple hundred stocks, and half of them didn't even trade very much volume at all, so they weren't tradable. So even back then, there was an underlying force that seemed to be in place, just like today. Okay, this book is jam-packed with tidbits that are just as relevant today as they were 100 years ago. Everything in this book is true in terms of how the market works, human emotions, mistakes people make, fear, greed, you name it, everything is the same. Okay, today we have the internet, we have algos, we have robo-advisors, we have quants, but it's still just human nature, and human nature hasn't changed, and it's not going to change. Okay, Reminiscence of a Stock Operator, I highly recommend it. Don't just buy it and read it. Read it every single year that you're involved in the market. All right, good luck.